Hey DT, what are your settings on your moving average indicators? I'm not sure. Let's take a look at them. I don't actually pay too much attention to these. They're just here because people expect technical analysis to be on the charts. I don't have much faith in technical analysis at all. I think it's all bullshit. It's all myths. This is basically a way to scam people as far as fake trading gurus on YouTube. They know technical analysis is something easy for people to understand, and people like easy to digest things, right? Complicated subjects like delta, theta, vega, you can't sell that. People don't want that. That's hard, right? They want, hey, here's some moving averages. Here's a RSI. Here's a MACD. Yeah, when the line's above this line, it's overbought. When the line, yeah, they want that bullshit. So I put it on the charts. So basically, I'm trolling you guys with the technical indicators. But if you actually want to know what the moving averages are, let me look it up real quick. I want to say it's just all Fibonacci's. So it's EMAs, exponential moving averages, 8, 13, 21, 34, 55. Yep, it's all Fibonacci's. So first 5, starting with 8. Why those? Because they're cool numbers, I guess. So people will probably ask about the RSI and the MACD, just the default settings on those. I don't think I changed like the periods on these. MACD, the fast length is 12, the slow length is 26, and the MACD length is 9. I believe that is standard default settings for the MACD. That's typical on most platforms. The RSI is your standard 70-30 levels, and the length is 14. And I believe that's also defaults most of the time. Some people will change those levels to 80 and 20 instead of 70 and 30. But again, I'm not a technical analysis guy, and I just kept things as the default. Plus, it's one of those things when I'm making videos on YouTube, you know, if I took all the indicators off the chart, you know, and it was just the candlesticks by themselves, people would be wondering, like, what in the hell is this dude? Does this dude even trade? Because all the gurus I see on YouTube, I mean, they've got like 15 indicators, right? They've got moving averages and Fibonacci levels everywhere, and boxes and circles drawn on the screen, and annotations. And then that's not even counting the 6 lower indicators they all have. They got the RSI and the MACD and the stochastics and the CCI and the momentum thingy and the super trend indicator, whatever the hell that thing is that, you know, all the fake gurus pushed there for a few months back. I remember there was this indicator that we're all trying to sell, and yeah, it's all just BS. Because all these indicators they're just reflections of what the price and or the volume is doing. So if you got the candlesticks and the volume bars, you've got all the information anyway. This is just a different way to read the candles and the volume. So it's all the same. Ico Man is asking, what is an example of your long puts? How far out? So the long puts in MES that you're seeing is hedges. What I'm doing, typically what I do is I go about 90 days. And I go about 10 deltas. Let's go to the 6,000 strike because it's a nice round number. If I sell a put, I'm going to get 42.25 credit. Now remember, the multiplier in MES is 5, right? Now with stock options, the multiplier on everything's always 100 because options represent 100 shares. But it's different with futures. Futures, every product has its own unique multiplier. In MES, the multiplier is 5. So the 42.25 is not me getting $4,200 credit. It's 42.25 times 5. I'm getting $210 credit, well, to 11.25 to be exact, per contract. And what I typically will do, I'll sell like 3 of these. I get $633 credit, buying power reduction at 866. But the point is, I'm getting 63.75 credit. I want to get to the point where when I take this off for 50% max profit, which would be about $300, that it pays for a free hedge to the downside. So what I want is I want to go put on some puts. So I take off those short calls for now. I'll put them back on in a minute, but I go find some puts. Probably somewhere kind of low delta, maybe around the 2 delta. I want to buy a group of 5 that cost me about, let's see, what are we putting on here? So $12, So the multiplier is 5. So there's $60 a piece. So yeah, that would be about $300. We go a little lower just to make sure the cost is what we want. It'd be 55 times 5. Yeah, 55 per contract times 5 is $265, $270 or so on these 5 puts. I'll go put the short calls back on. Make sure they're just 3. So this is a 3/5 back ratio spread. Let's zoom out. And I'm going to have to go and take off all my other positions in the analysis. All right, so what this is, 3/5 back ratio spread, really wide. Remember, I'm getting $633 credit on these 3 puts. If I take them off at 50% max profit, what do I get? About $315, right? What did I pay for these? A little less than $300. So if I take this off at 50% max profit, and then I can leave the puts on for free, right? And that's how, in my positions tab, I end up with that group of 7 puts there, that group of 5 puts there, that group of 5 puts there, that group of 9 puts there. There were some short puts that were part of these at one point, where when I took off the short puts for 50% or more profit, it created this free hedge where I'd already, the profit from those paid for these. So that's what I'm doing there. I'm not just going and buying puts, right? I have to have something pay for the puts. So use some short puts to pay for long puts. And you can do the same thing. It's not something I typically do. You guys never see me do this, but you can do this with pretty much any kind of strategy where you take the profits from one strategy to pay for some other hedge, right? So think of our put credit spread strategy. I could take profits from some of these put credit spreads that tend to work well, right? Well, most of our put credit spreads win. And say every time I win on a put credit spread, I buy a put debit spread in SPY as a hedge, right? You just take all your profits from the SPY put credit spreads to buy put debit spreads. This is a way to keep financing a hedge. Now, of course, it basically eliminates all your profits, right? Well, hopefully you got some other trades other than the SPY trade, right? That's what I'm doing in MES. I'm not necessarily trying to make money in MES, although I've made quite a bit of money in MES this year. Made a few $1,000s. But I've spent most of my profits in MES buying puts, holding long puts. But that's not like my main trade, right? I've got a lot of other positions going on too. So it all works out in the end. I can show you an example of the put credit spread hedge. So let's go to SPY. So let's say you want to do, what we've been doing, 60 DTE put credit spreads in SPY, or you sell the 35 delta and go $5 wide. In this case, you get 117. Let's just make the math easy. Let's say you get 120 credit. You take it off at 50% max profit. Let's say at some point you take it off for 60 cents. That's your profit. As soon as you take 60 cents on that winning trade, mentally, you just have to remember, I need to go pay a $60 debit somewhere for a put debit spread. So then you go and you put on a put debit spread somewhere for a hedge, in this case, 50 cents. But let's say that's the one you want to go with. So you actually profit 10 cents, I guess, overall, but you try to probably spend the whole thing, right? In this case, maybe go a little wider, do a $6 wide, spend 62 cents, whatever. But yeah, so, you're doing these put credit spreads, and you're getting winners like every 2 or 3 weeks. As soon as you get that winner, whatever the win was on the trade, go spend that for the put debit spread hedge. Now, you don't want to be hedging all your trades all the time, right? Because hedges are not profitable trades, right? They're insurance. They're there for emergency reasons. Hedges mainly just need to be there. Like all those long puts in MES are there for me to control buying power, because my short put trades in MES have the potential to, the buying power can fluctuate wildly on those things. So me having a bunch of extra long puts as a hedge, I don't hedge every short put that I sell in MES. That last group of 3, I didn't buy any puts with it. I could have, but I didn't. But every now and then, especially when I think the market is kind of scary, Now that's when I start hedging a little bit, putting on a lot of more of those back ratio spread kind of plays. If I'm going to sell puts, I'm going to buy a bunch of puts with it. If I went on the short puts, leave the long puts on just as some protection.